Let's talk covered California income. Hello, I am Kevin Knaus with InsureMeKevin.com, an independent health insurance agent in California, and also a certified covered California health insurance agent. And when I work with a client on a covered California application for health insurance to receive the subsidies to lower the premium, we spend a bulk of our time on the income section because it can be complicated. Every family is unique, and you have to kind of understand what is included for income because that is a big foundation of the premium tax credit subsidies that you receive. So, and this is all revolving around IRS because it is the IRS that makes these definitions, and that's who you have to reconcile your premium tax credits with at the end of the year. So the covered California income, the Affordable Care Act income, is called the modified adjusted gross income. Now that is the adjusted gross income modified by Social Security, retirement and disability benefits, tax exempt interest, and foreign earned income. And if you are claiming a dependent, that earned income and they have to file a tax return because they owe income tax, that income is in the mix as well. So again, like I said, this all revolves around the IRS, and so these are kind of the areas. If you look at your 1040 down at the bottom, line 11, that's the adjusted gross income. Then 6A is your Social Security benefits if anyone is receiving Social Security retirement benefits in the household. Number 2A is your tax exempt interest. That needs to be added in. And then generally you have to look at the instructions, but line 1H, other income, is generally the foreign earned income, but you'll want to work with your tax preparer on that. So I am going to be showing screenshots of the 2024 Covered California Countable Sources of Income document. Okay, so usually on the left-hand side, it'll give the lines for the 1040 where you can find that. Then over on the right-hand side, there's going to be two columns, MAGI MC, that's Modified Adjusted Gross Income for Medi-Cal, and then APTC, CSR, that's Advanced Premium Tax Credit, Cost Sharing Reduction, essentially that's Covered California. And sometimes income is counted for Covered California, but not for Medi-Cal. So that's why they kind of break those up. But obviously, wages is a primary component of your income, especially if you get a W-2. And then there are some notes where they talk about workers' compensation, and if it's part of the work, it reduces or replaces the recipient's Social Security benefits. So there can be some little tweaks on there, so you need to read the fine prints, but also, severance pay, commissions, allowances, tips, awards, bonuses that you receive from work. Social Security can be somewhat tricky because oftentimes people receive Social Security and we don't pay any income tax on that unless you have a part-time job. But taxed and non-taxed Social Security retirement benefits are included in the modified adjusted gross income. And to separate some of that out, it does note supplemental security income is not counted. So we're talking about Social Security retirement and Social Security disability insurance, and that counts for both Medi-Cal and the Covered California. Now, alimony, if you're receiving that and the divorce was prior to 2019, then you can include it. But after that, the Trump tax law made that go away. So you'll have to, if your alimony you're receiving is before then you can include it as income. Net self-employment revenue. And this can always be tricky for people that maybe you have a job, but you also have some self-employment income. And that goes on to your Schedule C, profit and loss from a business. And all of those schedules funnel into your adjusted gross income. But when you're working with Covered California, you need to think of your gross revenue for your self-employment income minus expenses, because that's what you're doing on your Schedule C. Gross revenue minus expenses, that's your net taxable income, and that's what you're including on your Covered California income section. Rental income, similar, you have to go to Schedule E. You may have a lot of revenue from rental receipts, but of course, there's lots of deductions and depreciation and all of that, so it may be actually very small in terms of taxable income you put into the Covered California application. Unemployment benefits, and there is a note about state disability insurance when treated as unemployment compensation. That is going to be taxable. Foreign earned income, that's a little tricky. Don't run into that one too much, but I do have some clients with foreign earned income, and so you'll need to talk to your tax accountant about that, and how to include how much of it. And then there are so many little things, just all kinds of lists of things that over the years people have brought to me and say, hey, do I need to include this? Sometimes you do. Like the first one, this guy Donald came to me and said, do I need to include the bribes? Yeah, you do. It's tax. Bribes are taxable. Court awards and judgments and settlements, those need to be included. Awards and bartering. So if you receive any award, monetary, and sometimes if it has a cash equivalent that you need to report on your taxes, that would be included. Bartering income. And sometimes this stuff, like I say, if you look at awards, countable, taxable portion for both of them. But right above that, AmeriCorps, Vista, stipend, and education award not counted for Medi-Cal, but it is counted for Covered California. So we're really parsing some of that stuff. Disability income, I didn't know, credit card insurance for disability payment, that's taxable income. Who knew? Disability insurance, and the general rule is if your employer paid for the disability insurance policy and you're injured and you're receiving disability insurance benefits, that's taxable. If you paid for the disability policy and you're receiving benefits on that, it is not taxable. Kind of like life insurance. Life insurance is not taxable to the beneficiary. A lot of insurance benefits, health insurance, is not taxable, but it depends on who is paying for it. IRAs, money you withdraw from an IRA is going to be taxable. Sometimes people are creating taxable events by switching from standard traditional IRAs to KEOs. You need to talk to your tax preparer about that. This is a question I have received a lot on. Are inherited IRAs counted? Now, Covered California says inheritance or taxable portion of inherited IRA or inherited pension is not taxable. So, okay. Again, I would talk with your tax preparer. If anything, I might want to, lean towards hedging the income high, including some stuff, because when you do your taxes and your income is actually lower than the estimate, you will get an additional subsidy from the IRS. It's a fully refundable tax credit. In-home support services income, and the big defining factor there is if you live with the individual. If you live with the individual that you are receiving IHSS income for, is not included. It's not, because it's not taxed. If you go to someone's home and help them and receive that IHSS income, that's taxable. Scholarships are another gray area, but scholarships that do not go towards books and tuition but are for living expenses are considered part of the taxable income and should be on the modified adjusted gross income. But again, you'll need to work with the school and really kind of figure out exactly how much of that award for your child is going where. Most Veterans Administration benefits are not taxable, not included. There are one-time lump sum distributions, like from a lottery winning and awards, maybe Social Security. Now, for Medi-Cal, that's a one-time lump sum distribution. It counts in the month that you receive it, but they don't consider it annual income because it's not recurring. Covered California, on the other hand, even though it's one-time lump sum, they want to know about it because more than likely it has to be reported as taxable income, and therefore, it will increase your income and reduce the subsidies. So regardless of what month you receive it in, you want to put it on there, but you want to make sure it's one-time lump sum and it doesn't repeat the next year. Child support, child care, no deduction for that at all. Now, there are some expenses that will reduce your income that you can, figure into if you want to on the Covered California. And here's a few of them that can be significant. If you have a high deductible health plan that is health savings account compliant, the money that you contribute to that health savings account, that portion that is allowed by the IRS will reduce your income. You can include it, because you may say, hey, I know I'm going to be contributing $6,000 to my HSA. That lowers your income estimate. Deductible part of self-employment tax for us self-employed people. And here's one that's kind of the self-employed health insurance deduction. That can be tricky, but it is there. And then when you make a contribution to your IRA. And of course, these are also included on that Covered California 2024 document. And like I mentioned, that self-employed health insurance deduction, that the IRS knows it's a crazy calculation that needs to be done. It's not real simple, but it is there. So that's something that sometimes people don't think about, and they just let it ride, and then, oh, I get to lower my income by $5,000. Oh, okay, that's great. That offsets some other income, or now I'm going to get a tax credit on my taxes. So that's kind of the modified adjusted gross income calculations for Covered California and the Affordable Care Act. If you have any questions or comments, I'll try and answer them if I have experience and if it's on that document, because it can be tricky. Otherwise, for InsureMeKevin.com, I'm Kevin Canals.